Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. Well, it's 12 noon. We've just got the Dr. Reddy's numbers. The stock is still deciding whether or not they like that set because the stock has been moving in a band of around 1% higher to around 1% lower. So I think we should get that up for you on the screen. By the way, we've got a money control exclusive that's flashing for you. I think JP Associates has deposited the mandatory 125 crore rupees with the Supreme Court registry. So that's good news. We were waiting by whether or not they could deposit that amount. I think there's another amount as well, which is a little larger than that. We'll have to keep an eye out on that front, but we'll try to get further details on that front. For the time being, the stock is reacting positively because they met one of those deadlines and 125 crores has been paid up. So good news as we speak. I'm sure we're going to get whoever's breaking this particular story, and they can fill us in. For the next 1 hour, I'm Nigel D'Souza, and with me is Sumaira. Well, plenty of results are coming in, Sumaira, so I think we could start off the show by going straight to our first management. We have HIL, who's on, that company is on our radar. Remember, the numbers were very, very strong for the third quarter. The operating profit has jumped up a whopping 150%. The margins as well have nearly doubled. To understand what's going on there, we're currently joined by Mr. Chaudhary, the Managing Director and CEO of HIL. Hi, Mr. Chaudhary. First of all, congratulations, sir. Things have looked very, very good. So good on you. But if you could help us out with a couple of numbers for both your segments, that's your roofing solutions as well as your building solutions. What is the capacity utilization levels in both those two segments?
Hello, Nigel and Sumaira. Thank you for having us in.
Pleasure.
And good afternoon to the viewers. Thanks to some wonderful work put in by our team and support of some able dealers and loyal stockists, we have been posting considerably strong Q3 results with a revenue growth of 32% over last year, and as you mentioned, double the profit. The roofing segment is, very much dependent on the demands, and we have an average of about 65%, utilization of the capacity in roofing. But on the building solutions, we are close to a 90% capacity utilization.
Mr. Chaudhary, good afternoon, sir, and congratulations on a good set of numbers. There's marked operational improvement this time around. Your margins are almost in double digits now. Both segments have done well. Is there scope for further improvement here? Is there a lot more headroom?
So, Mera, we have been facing continuously a lot of headwinds by way of cement price increases and RERA Act, which has immediately dampened the business on launches for new buildings. But definitely there's a lot more that we have done internally in pruning down our working capital. We have brought it down to 6% of revenue, and we are working strongly in cost reductions. So I think the traction is picking up. I would consider these results to be something that will go on.
All right, so if you could give us a sense, sir, in terms of your guidance going ahead. For the 9 months of this year, you've done around 940 crores. So if I just extrapolate that number, you should end this year with around 1,300 crores, very, very approximately. Can you up that number from around 1,300 crores for this year? What kind of a number are you looking at for FY19? And also, if you could tell us in terms of margins, 10%, can we work with that kind of a margin?
So, Nigel, we have a peak season, which is the Q1 of every financial year, and I think the major revenue kicks in then. So just doing an extrapolation may not be the right way. Q4 is not a bad quarter, but it is certainly not considerably comparable to Q1. And therefore, I would say we would post some good positive results and a growth over last year in both revenue and profitability. Going forward as well, I think, GST has supported the business by way of reduction in total duties by about 10% for our products. And I think that's boosted a considerable bit of growth. And as you would see, HIL is growing for the first time in the last 4 years. And our roofing segment, which has been degrowing over the years, has started picking up with the growth, with the 32% growth that we have posted. I think overall, this company should look at some positive next year as well.
Mr. Chaudhary, one quick question. You were talking about, your asbesto roofing segment. That started growing as well after, more or less flattish number, mild degrowth in the last few years. What is your current market share out there? And if you could tell us, who comes second, third out there.
Okay, so we are the pioneers in this particular product, and 70 years of legacy has seen this product really consolidate itself by virtue of its technology and product competence. We definitely boast ourselves to be the best product supplier in this segment. We believe we are at about 20-odd%, 22% market share in India. And in this particular segment as well, we have now launched the new product, which is the Charminar Fortune for the institutional segment, where we have vacated ourselves because the institutional segment is mainly catered by the steel sheet or the RCC. And there we have now come out with a great product internally built, which is the non-asbestos cement-based corrugated roofing sheets. And I believe that should also help this business on a roofing segment to grow much better. I think Vishaka Industry and Everest would be the next couple of them who are there on the market share base.
Okay. Mr. Chaudhary, this non-asbestos, the new commercial roofing that you're talking about, it's already been launched. What has been the contribution and what's the internal target there?
So this is the product we are launching for the institutional segment, as I mentioned, so mainly the government agencies and institutional segment, which today do not buy the asbestos cement roofing. It's a very robust product that we have come out with, and we have launched it on 4th of January this year. The seeding process is on, and from way of the market reports that we get by way of the market specialists, I think this product should be a revolutionary product in the industry. It'll take some time, Samira, to position this product and get it known to the institutional customer, but I believe that over the years, this will be a really big drive for HIL.
So you also have some concrete block division, right? I think that's a small part of your business. If you could tell us how much of revenue is coming in from there, and is that growing?
So the AAC block, as we say, aerated concrete fly ash cement blocks, this is not as small as such. They contribute about 20% of our revenue. And this business also, we are the market leaders, and I think these blocks are better known as Aerocon blocks because of our brand name, which is Birla Aerocon. And the business has been growing at a CAGR of in excess of 25%. And I think that market segment is going through a lot of consolidation with demonetization coming in. And we definitely see that growing further as the RERA settles down and the new projects comes up.
Okay, final question, sir, before we let you go. What kind of a revenue number we're looking at for FY19, FY20? You must be having some internal goals, right?
So definitely you can look forward to growth as we are triggering on, and while the numbers are something that will come through, I can tell you, Nigel, this company is definitely going to grow big numbers.
The market not looking so good at the moment, but just about holding on to 11,000 on the Nifty, and the Sensex also now down about 130 points, but above that 36,000 odd mark. Let's focus on some more numbers that have been coming through. Geojit Financial Services reported a good set of earnings in Q3. Assets under management have seen a robust growth of over 90% this quarter. Satish Menon, the executive director of the company, now joins in. Mr. Menon, good afternoon and congratulations on a good performance this time around. First up, my question to you is on AUMs itself. What is it that has led to this kind of growth?
Good afternoon and thank you. The growth in AUM is coming primarily from our shift of focus from being a mere stockbroking company to somebody who wants to create long-term wealth from mutual funds. So we had embarked on this objective 18 months back, that is beginning of last financial year, that we will try to build up our mutual fund AUM by selling SIPs. And that is gaining ground, and that is what you see. The mutual fund AUMs have gone up, and similarly the mutual fund income has gone up by 98% for this 9 months.
Right, Mr. Menon, just hold on to that thought, sir. We are getting some results that are coming in. VIP, the bottom line number looks pretty steady, I think. It's coming at around 26.9 crores. That compares with around 16 crores approximately.
And, On
Yeah.
this, we didn't have our own poll, but we had estimates from Edelweiss, which had expected a number of about 20 odd crores on the bottom line. So 26, almost 27 crores, you can say, on that front looks good, because sales were in any case expected to be quite strong, and the stock reacting to it favorably. We had the festive season, we had the reduction in the GST rate, so all of that doing well. 338 crores is actually a little lower than what this Edelweiss estimate had thrown up. They were expecting about 350 odd crores, but 338
And what was
in
the
any
growth?
case is not bad. I think growth would be roughly about 10%.
Yeah, 11% is the growth. I'm just trying to get a like-to-like basis. 11 to 12% is what the growth. What was Edelweiss expecting?
350 crores.
350 crores, and that would mean a growth of in comparison to them. Okay, all right. We have the EBITDA number as well. That's come out there. 57% higher, the net profit as well. So all the details are out now. I think the margin expansion is something that we should be looking at. So we should try to pull that up. It's coming at around 12.2%. So that's a margin expansion of nearly around 350 basis points approximately, Sumera. So that as well looking quite healthy. But if you could tell us what were the expectations? In terms of margin expansion, it's coming at around 12.
So margins were expected at 9. So, with the kind of EBITDA movement, if it's coming at 41 crores, I think margins at 12% was expected. The reason I think the stock may be correcting is because in the last 1 year, it's rallied, 200%, if I'm not wrong?
So, yeah.
So in any case, some bit of profit booking could be expected. 12.2% expected to be, is looking very, very good.
Yeah,
actually.
absolutely. So just to run you through the numbers again, on the top line, we have an Edelweiss estimate. They were expecting a growth of around 14%. It's coming at around 12%. So that's more or less in line. Margin expansion they were working with is around 50 basis points. Now that margin expansion is looking quite good actually if you take a look at it. So, it's an expansion of more than 300 basis points. The EBITDA number as well is looking quite better. And in fact, so the top line is more or less in line, but the margin expansion has led to even a big beat on the operating profit as well as on the bottom line. So I think these numbers, they'll get more, thumbs up than thumbs down. So it should go down as a beat. But as Sumera said, it's had a big run from around 100 all the way to around 400. So just keep that in mind. Stock's still holding mildly in the green. But we were chatting with the management of Geojit. Mr. Menon still with us. Sorry, Mr. Menon, we have plenty of results that are coming in there. But you were telling us about the growth in your AUM. And you said that if I got that number right, the mutual fund equity AUM, that's grown by what, 80% in the last year or so?
Yeah, from December 16 to December 17.
Okay, and
equity AUM has grown by 77%.
77%, and currently it would be at what, 2,500, 3,000 crores?
Equity AUM itself is 2,700 crores. Then we have a debt AUM of 600 crores. Total AUM of 3,100 crores. 3,100
crores. So you've seen a big growth there. Are you confident that you can keep up this kind of a momentum? Can you see it, grow at a pace of 50, 70% that you have been doing?
So that is the charm of doing SIPs. So when you do an SIP, your efforts are there in the initial sales. Okay. And then this money keeps on falling in every month. Right. So our idea is to grow this by this percentage at least for the next 3-4 years.
So it'll be at around 5,000 crores approximately same time next year.
Yes.
All right. Final question, Mr. Menon, if you could tell us, what about your wealth and broking business? You've done a total income of around 100 crores. How much of that comes in from broking, and how's that business done?
The broking business out of 100 crores has been at 71 crores. So that has been the biggest contributor in this quarter.
Okay.
And broking business has grown very well in the last quarter. That broking and equity related has grown by 35% compared to what we were in the December quarter of last year. So that is primarily due to the market activity. And the trends of January is also better than what we saw in the month of October, November, December. We feel that broking is coming out of its stagnant volume for the last 3-4 years. And the activity in the market has increased, and we feel that buoyancy will remain for the next few years to come.
Closer look at the numbers. I think the market didn't like it too much, and that explains why, in fact, Dr. Reddy's has moved to the low point of the day. Well, we have Indigo Remedies as well, the stock that's, in fact, had a big run in this month itself. Those numbers, well, net profit has come in higher. The margins are more or less stable. Maybe, in fact, the street was factoring in something more, so they're more or less stable numbers, I think. The revenue number is as flat as can be. And I think the operating profit number as well should come up for you on the screen. There are a couple of inspections that are on, so just keep that in mind. We're waiting for the outcome out there. There's margin expansion, mind you, because when you have a flat top line, and in fact, you have the operating profit that comes in higher by around 10%, that's telling you there would be a margin expansion of around 130 to around 140 basis points, and that's precisely what's happened. So stable numbers, I guess, more or less. We don't have a poll for this one, but the stock has seen a big run in the last few days. I remember the stock moving higher on good volumes. So I think there is some profit booking that we are seeing last few days. That's the chart we should talk about. Yeah, it was higher, went to 310 as well a couple of trading sessions ago. But as promised, let's get you some trading ideas. We have Ashwini Gujral as well as Rajat Bose who joins us. Ashwini, coming across to you. Your take on the Nifty. We're not doing much. It's been a good series, but can we end on a good note?
See, the market is consistently losing ground, and you have large stocks like State Bank, which is now down almost 5%. So chances are that some sort of large correction may be on the way, because even with good news, the market does not seem to be going higher. We spent last 2 days in a very narrow range, and maybe the time to break that range may have come. If not today, maybe on Monday. But it's fairly clear that there is selling at higher levels, probably even shorting of PSU banks, etc. So once financials start giving way, and IT is already sitting on a large rally, so it looks like there is very little which can support the market once the downside momentum starts. Maybe 11,050 is that zone where once that breaks, probably momentum will pick up. We have taken short positions on Bank Nifty as well as Nifty, and chances are that a downside will resume from here. Having said that, individual stocks, Union Bank is a sell with a stop of 146, target of 134. DHFL is a buy with a stop of 588, target of 615. And Adani Enterprises is a buy with a stop of 204, target of 218.
Right. Rajat, good afternoon to you. What are your trading ideas?
I have two trading ideas. Both are long calls. Havels with a stop below 582.75. Targets would be 593 and 597. And Kaplan Point with a closing price stop of 653. I'm looking at 666 and 670. It's a 2-day trade that is running up to Monday.
Okay, all right. Thanks so much, gentlemen, for stopping by and giving us those trading ideas. Well, the frontline index has moved to the low point of the day, but a couple of stocks, Amara Raja, just take a look at the intraday chart there. That stock is seeing some selling pressure. And even India Cements, I think we should get the chart out of India Cements. In this hour itself, the stock has moved from the green to the red trend, so the intraday chart should come up for you on the screen. And even something like Century Textiles, that as well as seeing some selling pressure. So keep an eye out on a few of these stocks. The advanced decline ratio is in favor of the decline, so close to around 1,300 stocks that are declining for roughly around 800 stocks